Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, June the 12th. The year is 2023. Let's talk trading. What we see. These videos are for educational purposes only. Your results may differ from mine and different from Walmart's. What we're going to do today is just talk about what we see. We do a lot of trade. I do these trading with Walmart videos, but before we actually place a trade, we're looking at the charts and we see things. So we're just going to tell you what we see. And that might give you a little clue into what makes us successful or not successful as we trade. So I'm going to bring up a 1 minute chart. I've got the flip-flop boxes. Let's see. And we can also look at state changes. I also have the fib lines up. I've got the 3-level ZZ semaphore up. So, Walmart, what do you see right now?
Actually, I think it would be really helpful for the traders if we take a step back real quick.
Okay.
And let's define terms. What's the difference between looking and seeing?
Okay, go ahead.
Okay. For me, anyway, the difference between looking and seeing is when you're looking for a trade, which can be deadly, what you're doing is you're looking back at the chart or looking at the current chart, and you're looking at the chart and making sure that all the things that you say you need to have in order to take a trade are in place, and you're constantly looking for that. And sometimes you can find yourself going in, flipping through the charts and just looking for that opportunity, looking for that opportunity, looking for that opportunity. Nothing wrong with that, except for the problem is there's another component, and that is seeing. And the seeing part, for me anyway, is, okay, all my things are there that I need in order to take a trade, but is the market actually doing what we expect it to do in that scenario? Here's a perfect example. Okay, if you look at the prior M1 candle, okay, we had right there, we had at least on my chart, I had a 1 ball. Now, I know one of your rules, it's not a hard and fast rule, but you don't take a trade on a 1 ball. You want to wait for a 2 ball or a 3 ball if you're going to continue going in that direction. But that's, so that's a reason not to take the trade. But at the same time, I would have taken that trade, and the reason why I would have taken the trade, and it is because when you see how the market's been reacting and the way it's been going, momentum right now is in a downward direction. We've got a really nice, nice red candle on just about everything you see out there. So you got a sea of red. So even though you had a major reason not to go short, the reality is that, hey, maybe that's something that we can, excuse the expression, overlook for this moment in time, because what you see is that the market is actually extending its way down, and now we got a 3 ball. So that your expression is 1 ball bounce. My expression is 3 balls come from 1 ball.
Yeah, but the only thing though, Walmart, the thing is, if I'm in a trade and I see a 1 ball, I usually get out because, like I said, it just seems more often than not it goes against me.
Yeah, I've seen it do that to you more than one occasion. But but extending that rule, as a reason not to get into a trade, that could be a reason not to do it. And and again, looking at the chart, it's that thing where, we did have a below the indicator 2 where I suggested going in. We had some momentum going in that direction. We had a flip-flop box, maybe not on yours because mine was my up candle from candle 1, 2, 3, 4 candles ago was only 1 pip up. Not 1 pip, 1 point up. So it may not have been a flip-flop on some people's charts, but on mine it was. But I did not have a state change. So that's a reason not to take the trade. there was a one ball there that got put in. So there's another reason not to take change. I usually don't take a trade on a one ball, in that direction. But at the same time, I now look at this chart and I look at the downward push that's there. It's sort of like, the reality is we've just broken 50. We're about to break the 45. It's probably going to get down to the 40 or really close to it, and people are probably going to say I'm just, doing Harry hindsight here. But the reality, that was my thinking in all that process. I didn't take the trade, but that would have been a good trade to take because what I see is the market moving in that direction. For whatever reason, it was moving in that direction, and you have to go and look, not just look for all of your rules to be satisfied, but also see what the market's actually doing. It's the type of thing, if you got all your rules satisfied, you've looked for a trade, you got all your rules satisfied, is it foolish to just jump into the trade if you see the trade, going in the other direction? So, for instance, like right now, you got a flip-flop, you got state change, previous candle was, it had gone above the indicator 2, so that would have been a good reason to go long, right? No, not for me. Why? Because what I see is that, the market just seems that it wants to go down for whatever reason. I don't know what those reasons are. It just what I'm seeing is a big push down, for whatever reasons that are out there. We've only had 59 pips on the day right now. We're only in a 10 percentile. I mean, and we're at the bottom of the day. To me, that's not a reason to go long.
Yeah, okay, for me, I think we might define look and see slightly different. Because but I guess it's more like looking at and then seeing. So, for example, a couple people could be standing on the street corner and there's a car accident. Well, they were both looking at the car accident, but what one person sees or recalls is going to be a lot different than what another person sees or recalls. But they're looking at the same thing. So what happens is a lot of times people see what they want to see, and that's based on biases, experience, education, desire. So right now, for example, I don't like prices in what I call the launch pad, between any of the 40s. And price usually likes to rocket out of the launch pad. But since we came down to the launch pad as opposed to going up to the launch pad today, I'm a little wary of going long. Also, we only have a small range on the day, and we've got a new H4 and it needs to extend in range. So, that's something that I look for. Or that's something that I'm looking, I'm seeing that we haven't hit the range. I'm also knowing that there's a H4 pivot down around 25.30 that hasn't been hit from a couple of days ago. So, we can look at the same chart, but many times you'll be long, I'll be short, or vice versa. And it's just like, how does that happen? It's because we're looking at the same thing, more or less, but what we see and interpret are entirely different.
You're exactly right. I mean, and the funny thing is, you use that example, I could go short, you go long, looking at the same chart, but we're seeing something totally different. And at the end of the day, we both can take wins, or we both can take losses. It's just, it can very easily happen. And, I'm going to go back and jump on my hobby horse again. So what's the most important thing? Going and preserving your capital, therefore making sure that you've got your money management in place. Because what you see and what I see, looking at the exact same chart, the exact same indicators, could vastly differ. And if we don't have those things in place, we can get ourselves in trouble. And I guess you know, I've been thinking about this for a while. I probably should have brought this up with you ahead of time. I look at, when we watch these charts, you know, you've written all these great indicators, you know, and what you're really good in terms of spewing out factual statements about what the market has done, you know, and making it very, very solid, you know, in terms of what the market's done. But taking that information and actually using it, okay, I think is more of an art. It's not a science, it's an art. My father was a professional, you know, mathematician. And I remember saying to him, what's the difference between a statistician and a mathematician? And what he would say is a statistician is someone who looks at things through the eyes of science. In the eyes of science, things are either true, they're false, or there's a theory. But that's all there is. A mathematician is an artist who actually sits down and is able to go and look at the things that are going on and come up with a creative way to actually go and use that in new ways that have not been used before. And I think trading is that way too, in the sense that what we're doing is we got all the statistics, we got all the facts, we know what our baseline is. Okay, now how do we go and use that in such a way that we can make money? That, and it may not be something that's necessarily, you know, based completely on fact, but rather based on what we see the market actually doing, and, you know, relying on the fact base, but at the same time going and looking at it through the eyes of an artist. Unique concept, I know, but, you know, it's something to think about. And once again, here's, you know, we had that little brief run up, and this is what I would have been afraid of with going long on that, you know, on that one, flip-flop box from about, you know, 5-6 minutes ago. You know, you could have gotten out with 1 pip, but everything I see is down. Everything I see is down, you know, and so now you could have, if you would have gone on the next flip-flop and taken the short, you would have had a drawdown of about a pip, maybe a pip and a half if you got a really bad fill, but you could have also been out right now with 7 pips.
Yeah, what did I say? 25-30 something was that?
Yeah.
Actually, I could yeah.
I think it's 25-31 or 32, something like that, if I recall correctly.
Well, let me see. Let me just pull it up here. It's 25-30.6 on this chart. There's that missed H4 pivot, and it's getting ready to be taken out. Now, on the other hand, on the upside, we missed the pivot for this current one's at 25.66. So, but that probably won't get taken out till later in the week.
Yeah, because we're certainly going in the wrong direction on that. Could it happen? Sure. In fact, the pound is famous from going from one end of the range to the other. You know, and it's funny because when we first got on this call, we were talking about a range of somewhere around 47, 48. Now we're at a range of 68 for the day.
Right.
So it just shows you how quickly sometimes fortunes can change.
Yeah, literally fortunes. In fact, we've got a daily pivot that was missed on Friday at 25.15. So there's another reason to be looking to go short. So, fellow traders, the fastest 15 minutes in trading is just about over with. We'll probably do another one of these what do you see videos, because I think more than like talking about a system or talking about psychology, these just might give you a whole new way of quote-unquote looking at the chart, and then you might learn to see something that you've been missing, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.